All right, so it's FOMC Wednesday. I've taken a lot of trades. I'm going to relax by giving a presentation on fear. And this is the mental game of trading, chapter 5. I hope you all enjoy. Feel free to post your commentary along. I'm more than happy to answer. Okay, so chapter 5, fear. We can easily forgive a child who is afraid of the dark. The real tragedy of life is when men are afraid of the light. And that was a quote from Plato. Okay? Trading is far more intense than the typical job. And here's a picture of Tom Brady throwing a football, as if that's a typical job. In trading, you get paid by your performance. You know, if you don't perform well, you don't get paid. If you don't perform well, you actually lose money. What if you had money taken out of your paycheck if you underperformed? I do. All of my life revenue is based on performance. If I have like 3 or 4 losing trades in a row, some people will leave the Legion, and that hurts my heart, and I get a pay decrease. And that's okay. You know, that's how it should be. In this world, results are the only thing that matter when it comes to trading. Of course, if I have a losing trade, I also lose that money too. Trading is even harder. Trading as a profession is even harder than a professional athlete. It's one of the hardest professions in the entire world. Tom Brady doesn't get his pay docked if he throws an interception. Tom Brady also has a really good track record too, so it's something to consider. But trading's tough. And it's tough because there's a lot of uncertainty. So uncertainty is what causes fear. We don't know what's going to happen next. And what we want to do is we want to use our emotions as an indicator, not to kind of like shut them off, but like I can notice, oh, hey, I'm a little bit more fearful today. I was a little bit, I was kind of afraid to click the trigger a few times because I was like, oh, I'm used to seeing this amount of green. I'm afraid of giving that back, even though it was a really good setup. Unfortunately, I missed the setup, and this would have been like a 10K green day. It is what it is. You have to take what you're given and just learn from it. Use anxiety and fear as an indicator that something is wrong with your position or read on the market. So if you're being super fearful, maybe it's for a good reason. Maybe your read on the market is a little bit off. Maybe there's a position that may be like, you know, a little bit offsides, a little bit wrong. I kind of felt that way with Apple this morning, AAPL. You know, I had a Apple bear call, basically saying Apple's going to be underneath 200. And it just felt wrong. So I just cut it. It was just causing too much anxiety. And maybe that was the right decision. Maybe it wasn't. The odds and probabilities say that Apple's going to close underneath 220. But some tips to reduce fear. Reduce time in front of the screens. So if trading is not your main profession, try to only stay on the charts like 1 to 2 hours a day. That saves up your mental capital. You know, some days I'm looking at charts for 12 hours a day, and that's just, I'm not like the best person I can be to everybody else if I'm doing that. Sometimes it's necessary, most of the time it's not. Review your trades. This helps reduce fear. What trades worked out the best for you? For me, that's like cash secured puts, covered calls, leap call options. Start really working on your edge. That will reduce your fear. Make your decisions more mechanical, so non-discretionary trading. So instead of like gut feel, you should do like if this, then that. If this, then that. Versus, yeah, I feel like this is going to go up. Try to be more mechanical. If the RSI 14 is oversold and the stochastics are beneath 30, then I will sell a cash secured put on a stock that is above the 200-day moving average on the daily time frame. That'd be an example. Rely on factual data to make trades. So not based off emotion like, oh, I like that company. No, what's the company actually doing? Be okay with missing some trades. So you can't catch everything. Just be cool with it. Hey, that trade went without me. What can I learn from it? You can always take a lesson away with you. You can't take every trade though, nor do you want to. Build a trading plan. That's going to be really important. You can see that in the courses. You can see one of my trading plans. All these help reduce fear. Okay? Certainty is the antidote for fear, but we live in a world of trading where we don't know what is certain. We just deal in probabilities. Like, look at that. Market was just about to break the lows. Quick wick, zip back up. We did use AI, though, to say that SPY was likely to close the day at 565. Look at that. It's closing the day right at 565. It's been like a magnet all day. That's been the most frequently touched level. So embrace the uncertainty in trading. If you do that, you'll unlock your mind. Common signs of fear and tips on how to handle them. Risk aversion. So if you're risk averse, it means you're probably fearful. Obviously, we have a natural reaction to not want to go through pain. We don't want to take physical pain, financial pain, anything of the sort, emotional pain. Again, to help with risk aversion, obviously just set a max loss, know your risk up front before the trade, and accept it. Overthinking. I can do this sometimes if I'm a bit overwhelmed. Maybe I have too many tabs open, as you can see. That kind of takes up mental RAM, but overthinking causes cognitive overload. I have too many tabs open. To help with this, write out your thoughts. So I need to write out my thoughts. Be like, my reads on market, good. Be picky with the trades, stuff like that. Just write down whatever's going through your mind. There's no right or wrong answer. That can kind of clear out your mental RAM by writing it down. I like to have a whiteboard next to me or just a notebook, and just write down whatever's on the mind. Second guessing. Fear is caused from being afraid to make a mistake or to lose money. Write out your optimal decision-making process. So again, that can come down to using the expected value calculator. That's a really good way to just help map out your decision-making process. And I'm going to be using this for every single trade alert that I do. Not trusting your gut, the fix is to get into the zone. So I really need to focus if I really want to get into the zone. Okay? Your gut is the most accurate when your focus is the highest. So if you're doing multiple things, if you're talking with somebody, there's a distraction, and you're trying to read the market and trade and manage your positions, you're not going to be in the zone, so your gut may not be completely right. Negative future, as in like you're worried about the future. Write out the worst case scenario that can happen with every trade. What's the worst case that can happen? The fix to that is to accept the loss up front. Like, just imagine the money is gone before you even click the enter button. FOMO, a common form of fear of missing out. So here are some signs of FOMO. Inability to stay focused. Okay. Feeling like big moves are happening elsewhere. That's a sign of FOMO. If you have adrenaline, if you're kind of like hyped up, that's a sign of FOMO. If you're afraid to miss the next move because you just missed the last move, you can kind of see that happen to me sometimes in futures trading where I'm like talking, a big move happens and I'm like, damn it. And then I'll try to like make up for it. As you can see, I've gotten better at that, but it was a big problem even just a couple months ago. When the market doesn't suit your style, FOMO can kick in. Usually that happens in range-bound markets. If the markets are just dead sideways for a period of time, that can kind of cause a lot of FOMO. A slow market can cause FOMO. Don't let it get you. The market can move in any way it wants. You just gotta roll with it, right? The goal is to find the real cause of FOMO. Why are you fearing missing out? Do you have this need for action? Do you have this need for status? Do you want to show that you caught a big trade? Or do you actually just want to catch the big trade because it's profitable? Why not take a slower, more consistent approach with the wheel strategy or just investing in good dividend stocks that slowly go up over time? Not to say that that's always the best strategy. I'm just saying that there are multiple ways to profit in the market. Don't let FOMO have you feeling like you have to profit from 0-day call options on the stock that's squeezing, you know? Map out the underlying reasons. That's going to be important. What does a loss mean to you? And a quick tip to overpower your fear is to write out what you have done. So right now you're listening to this video, you're listening to this live, you're participating in improving your mental game in trading. Write that down. Say I've put in this many hours working on my mental game. That should give you some confidence. What inputs are you doing that are actually causing, what inputs are you actually doing that are leading you to your goals? So for me, if I'm ever feeling down or just like not successful, or I've taken a couple of losing trades in a row, I gotta remember, I've been trading for 8 years. I know what's going on. I know the intricacies of the market. I always have more to learn as well. I'm a professional chartered market technician. That took a very long time to study for, practice, get all the sponsors, taking the long, rigorous tests. I just need to go back to my testing days and stay true to the principles and remember that I have gone through the ringer. I need to think about this if I'm ever feeling down. I'm a certified options trader from TD Ameritrade, funded futures trader. I've also helped thousands of traders learn technical analysis. So I'm going to go back to that if I ever feel like crap. Now, you may have more credentials than me. You may have less credentials than me, but use what you do have. Everybody's got something, okay? Use whatever you can. Value your skill. What are you good at? For me, it's the wheel. It's selecting strike prices, credit spreads. Although lately my credit spreads haven't been doing as well. But the wheel's been doing really well. Realize that you can be successful when you put in the correct inputs, the studying, the training, talking with a coach, talking with a trading buddy. To overpower fear, come in clutch when the time is right. You know, step up your game when there's a big setup and it's your favorite setup. Put the risk on, manage it properly. That will help mitigate fear. Okay, so that's chapter 5, fear. There's a lot more to the chapter. I just kind of went over the main points. We don't need to cover every page of every chapter. That's not the whole point. So I hope you guys enjoyed that chapter, chapter 5, fear. The next chapter is tilt. And tilt's a really important one. If you can master tilt and never go on tilt, you'll never blow your account. Okay? So I'll see you guys for the next chapter. Peace.